Judo! Judo! Is that on record?
Roll with it.
That is fantastic. Am I supposed to agree or disagree? Anyway.
You're in Alberta.
Yeah, I think we're safe here. So, Joe, I've been at this for about 16 years, and I find that for the past 14, we've typically talked with clients about 5-year term. A 5-year variable, a 5-year fixed. I'd say that was over 95% of the business.
Right.
In recent years, with these rate hikes, and hopefully some speculation that rates will come down in the future, we're starting to see people explore other options. Shorter term mortgages, not just that 5-year from years past, but tell me, what does this mean? What does this look like? What are your thoughts?
Sure. So, I mean, if we look at, say, fixed rates, you're looking at a set rate for a period of time. So if you say, I want to do a 5-year fixed, you understand that that rate, your payment, everything's going to be set for that period of time. But with what you're saying, people think rates are coming down. They still may want a fixed rate for the stability and because they just like that, but they don't want to commit that long. So there's commitment issues, I guess. But that's okay. 3-year fixed is kind of the sweet spot that a lot of people are going to right now. It's that middle ground where you're getting some security with a fixed rate for a period of time, but you are not committing to that long-term period where if rates do come down, you're now kind of stuck there. Because as we talked about before, you might get a big payout penalty or something if you want to break it. So you could do a shorter term fixed rate. You don't have to go 5. So 3 years is a very popular one. You know, the 1 and 2 year right now, not as popular just because they're pricey. They're expensive right now. Historically, shorter the term, the shorter, the shorter time you have on the mortgage, the less interest you're going to pay.
Because the less security you're purchasing.
Right. But right now, that's not the case. We're in a weird environment where a short-term 1-year rate is more expensive than a 5-year. So, you know, that middle ground is kind of that 3-year that we're seeing a lot of people in. And it's not a bad place to be. You're going to save money compared to doing a 1 or a 2. You're going to pay a little more than a 4 or 5, but hopefully those kind of last 2 years after your 3-year, you win out.
Absolutely. Yeah, no, I find that approach is very common right now and a popular one. I like it as well. So certainly, if you'd love to strategize, talk about mortgage options, please reach out, give us a call. We'd love to chat.
Judo!